These 7 large cap mutual fund I have carefully selected from more than 50 large cap mutual funds based on very important factor. Hi everyone. Did you know that recently almost every single day in India a new mutual fund is being launched? There are more than 3700 mutual funds belonging to 50 plus different mutual fund categories. If you want to invest your salary regularly, it is going to be very difficult for you to select the right mutual fund. That's why in this video, I'm going to share with you one large cap mutual fund that is likely to offer a sweet combination of best returns, least risk, least volatility, and cheapest to buy. Now you may have a very natural question that Rahul, why are you suggesting large cap mutual fund for salary investment? Well, there are 3 key reasons. Number 1, large cap mutual funds are the only mutual fund category that can give you decent returns in the next 3 to 5 years of investment horizon. If you compare with mid cap or small cap, even multi cap and flexi cap, your investment horizon must be 8 to 10 years, right? Large cap mutual funds can give you decent returns within 3 to 5 years, right? Now, I'm not saying that you shouldn't invest large cap funds for longer term, but they work like charm even for the shorter duration like 3 to 5 years. Reason number 2 is that large cap mutual funds are the least risky as compared to other mutual fund categories when it comes to stocks, because they only invest in blue chip companies. So your chances of getting negative returns or low returns is likely to be less if you plan for 3 to 5 years of investment horizon. And lastly, large cap mutual funds are less volatile, least volatile. Therefore, you are likely to see less rise in your blood pressure. Okay, let me now show you 7 large cap mutual funds that I've carefully selected based on some data. Don't worry about the Excel spreadsheet. It might look slightly complicated, but I'm going to explain to you in a very simple language. Okay. Now, any of these 7 large cap funds that you're seeing, this video is not sponsored by any of them. My sponsorship comes from your liking and subscribing to my YouTube channel. So please like and subscribe this video. Okay, so now moving on. These 7 large cap mutual fund I have carefully selected from more than 50 large cap mutual funds based on very important factor that is called 10 years rolling returns. Okay, I'm going to explain to you in a minute what the rolling returns mean, but very quickly, I want to show you that these are the 7 large cap mutual funds that have generated better returns than the index return in the last 10 years consistently, if you consider the 5-year period. I'm going to explain to you in a minute, right? If you're investing in large cap mutual funds, please make sure that that large cap mutual fund has all the chances to generate better returns than the index. Otherwise, you're better off with index funds. Just go and invest in Nifty 50 or Nifty 100, because if you're paying expense ratio for the large cap mutual fund manager, your expectation should be that at least they need to give you better returns than index fund. So for example, here you can clearly see Mirae Asset large cap fund has generated 15.80%, which is roughly 3% more than the index returns, right? Some of you might say, actually, it's not a lot. It's very marginal increment from the index. I want to say yes or no to that, right? No, if you are only investing small amount of money and for low duration, then it is better you invest your money in the index funds. However, if you want to invest large amount of money and for a longer duration, every 1% will make a huge difference. Let me prove it to you, right? So what you will see here in this table below, index fund, if they have generated 12.7.8% return, mutual fund 1 has only generated 1% more addition to what index fund has given, right? Now, if you look at it, if we consider 10 lakh rupees of amount, right, you will see that between index fund and mutual fund 1, after 10 years, so this is the 10 years calculation, you will be better off by 3 lakh rupees. 1% will make a difference of 3 lakh rupees if your investment amount is 10 lakh rupees and you're investing it for 10 years period, right? Likewise, if it is 2% here, you are going to be better off by almost 6.5 lakh rupees at the end of 10 years. Likewise, if you've got 3% here, you will be better off by almost 10 lakh rupees, right? So always think about how much more returns that your large cap mutual fund can generate on top of index fund, and even 1%, 2%, 3% will matter if you are investing solid amount of money right? And for a longer duration. If you're only investing 10,000 rupees, 50,000 rupees, and only for 3 years, yes, I agree with you that it is not a huge hike from what the index fund has generated, and you're better off to invest in your money into index funds, right? Now, these 7 large cap mutual funds have generated really good returns. Let me quickly explain to you what the rolling returns mean. So if we take a 10-year period here, right? So this is the 10-year period here, okay? So let us say from 2012 to 2022, right? 10-year rolling returns actually mean that in this last 10 years, if you take 5-year period, right? So for example, let us say 2014 to 2019, right? Or you take from, for example, 2000, let us say 17 to 2022, right? In this 5-year period and in this 5-year period, all the investors would have generated average returns of 15.80% when it comes to Mirae, right? So it is not point to point returns. It is about consistency of the mutual fund, right? And we can clearly see that these funds have outperformed the large cap index by a good percentage in the last 10-year period, which is a very wide period, and consistently. That is more important, right? Now the question comes, should we be selecting Mirae Asset Large Cap Fund because this is generated the best returns? My answer is no. And that is what we are going to now discuss. We now actually need to look at last 3 years data, because last 3 years is absolutely the important thing. 3 big things have happened. Number one is that COVID kicked in 2020. So right, 3 years of market going up, down because of COVID. Second is Russia-Ukraine war that has kicked in this year. And also the recession that has been looming in US and Europe. These 3 big factors, we need to understand how these 7 large cap funds have performed in these turbulent times in the last 3 years. That will tell us which is the fund that has performed best in these turbulent conditions, right? So if we look at their alpha here, right? Now alpha is how much extra return that these funds have given over the benchmark in the last 3 years. This is based on the last 3 years data, right? So if you look at it, we can clearly see that PGIM and Axis Blue Chip has given worse returns than the index. That is why I am going to say that we are not going to select these 2 funds. If you look at Mirae Asset and SBI as well, their alpha is 0.08 and 0.06. They are marginally almost there in terms of index returns. We are not going to consider any of these 4. So I am going to discard these 4 mutual funds. That leaves us with Canara Robeco, Nippon and ICICI. And if you look at that, Canara Robeco has given 2.27% better returns than the index. Therefore, it is one of the best funds that has generated from alpha perspective. Likewise, Nippon has given better returns and ICICI Pru Blue Chip also have given better returns than index. So these are the 3 funds that we should consider from last 3 years perspective. However, let us now look at another factor, which is beta. Beta is volatility or the sensitivity that the fund has as compared to the index. What I mean by that simply is that, let us say if the index is down by, let us say 100%, okay, for some reason the market is down, then that means that Canara Robeco will be down by 89% and Nippon will be down by 97% and ICICI Blue Chip will be down by 94%, right? So from a volatility perspective, sensitivity perspective, again, Canara Robeco is a better fund as compared to these 2, but again, these are not far away from that, right? Let us look at the Sharpe ratio. Sharpe ratio is very simple. In terms of if you were to invest your money into risk-free assets such as bonds or fixed deposit, are you taking higher risks as compared to those assets when you are investing in these funds? So higher the Sharpe ratio, better it is. So if you look at these here, we can clearly see that Canara Robeco's Sharpe ratio is better than these 2 funds. Again, they are not far away. But lastly, if you look at the expense ratio, that is where my heart always says that if the expense ratio is very low, and you see it is equivalent to some of the index funds as well. I mean, index funds, their expense ratio is like 0.10%, 0.08%, that low. But here, Canara Robeco mutual fund has given best returns, 2.27% in last 3 years. Their beta is best, their Sharpe ratio is best, and their expense ratio is also 0.38 only. That tells me that Canara Robeco mutual fund is the best if I have to select only one mutual fund among all these 7. Although I can't give you financial advice, if I were to select out of these 7 large cap mutual funds, I definitely will go and invest my salary in Canara Robeco Blue Chip Equity Fund because of its performance in the last 3 years, its performance in the last 10 years. Does it tell me that it is going to give the same returns in the future? Absolutely not. That's not the guaranteed returns that it can promise, but likelihood of this mutual fund performing better than other large cap mutual funds is very high. Now, very quickly, I'm going to show you Canara Robeco Mutual Funds portfolio details as well, just so that we are very clear. So if you look at Canara Robeco Mutual Funds, number of stocks 46, 53% of its investment is in the top 10 stocks. If we look at how they have, from a sector's perspective, they have invested their money, you will see that financials is the top sector, 35% here. And what you will see is they've actually increased their investment into financial companies like banks and things like that. And you will notice that they have done a very sensible decision making here in terms of reducing their exposure from last year into IT stocks, and it has brought down from roughly 15% to 10% because of how the US recession kicked in last year and the technology stocks were all down. So I think you can see this, that they have made some sensible choices. So from that perspective, this looks good. If you look at their complete stock holding, you can go ahead and quickly check it here. ICICI Bank is the top holding right now, but again, that is likely to change. So all these they have invested in looks really, really good companies to me. Overall, my recommendation is to invest money in Canara Robeco because of these factors. If you like this video, please press the like button, and if you have any question, please drop them in comments. I'll be more than happy to answer as many as I can. I hope you have a nice day. Keep rocking.